All right, this is the LTC Tree Summer Vacation Edition chat about long-term care insurance between Derek and I. How's it going, Derek?
Hey, good, Drew. How you doing?
Good. I'm probably going to start sweating while we're making this video because it's 106 degrees out here um,
You're in
in Florida.
sunny South Florida.
Yeah, exactly.
Yeah, we're at 90 degrees today up in Georgia. So, well, good. Yeah. What's you want to talk about the fun subject of long-term care insurance, huh?
Yeah, I mean the reason why we're doing this during, not that we're really on vacation, but summer vacation is there actually have been some developments in terms of pricing on these policies that might be surprising for some of the people who watch our videos.
Yeah, we get a lot of questions on the differences between hybrid long-term care insurance and traditional long-term care insurance. What's the difference? What should I do? Um, and an interesting development that's happened specifically on the hybrid is they've actually lowered rates. Who's heard of insurance companies lowering rates?
It's kind of
The reason,
counterintuitive, but we can
yeah,
explain why that's happening, and it'll make more sense.
yeah. So 18 months ago, the federal funds rate was 0.5%, and it's all gone all the way up to 5.5% over the past 18 months. So insurance companies are healthier, so they can take the premiums, go invest, get 5% on the 30-year treasury, and it just makes everything healthier. So what we've noticed is the mutual companies, not the stock-based companies, the mutual companies, I think pretty much all of them have lowered the rate to sell that hybrid long-term care product. So it's making it a lot more compelling when you're comparing it versus a traditional long-term care insurance plan.
Yeah, exactly. And it could also be a little bit of a unique opportunity that might go away because, actually just today, the inflation rate came out at a lower print than they were expecting. So if inflation starts
Yeah.
going down from where we are now and they start lowering interest rates, the what we're seeing right now, which is a good thing for consumers, might reverse. So if you're kind of on the fence about investigating this topic, now is a good time to at least get some quotes.
Yeah, and that's kind of we get people contacting us. Had a guy today call us from one of our YouTube videos up in New Hampshire, and his question was, Derek, what should I do? Traditional long-term care insurance or hybrid? And when we started this company 20 years ago plus, you know, we don't work for one particular company. We work for the consumers. We work for you. And we just kind of go over the pros and cons of each product. So that's what I mentioned to him is the the pros of the hybrid is the premium's guaranteed. And um, that's what I mentioned to him also is why did hybrid insurance, why did that market even develop? And it developed because the traditional plans about what 10, 12 years ago, they started raising the rates and people want guarantees. So that's one
Exactly.
difference.
Yeah, so the biggest thing is the word guarantee. If you purchase a policy right now when the bond rates are high, you're locked in no matter what changes macroeconomically. So if the interest rates go back down and the prices go up on new policies, you're protected from that with most of the hybrid plans, because it's locked in at the time you buy it, and every number on your illustration is guaranteed.
Yeah, and so that's a good point because people want guarantees. They don't want to trade their long-term care risk in exchange for a premium rate increase risk. Now, with that said, there is still a place for the traditional plans because not everybody has $100,000 lying around. Although you can't pay it over 10 years, but some people need to kind of pay as you go, and that's where the traditional long-term care plans have their place as well because you're dealing with opportunity costs. What could you have done with that $100,000 if you would have left it in your investment account? So, we typically I recommend the hybrid plans for people who have net worths a couple, maybe 600,000 or higher. If you have below that, you probably want to still focus on the traditional plans, just as a rule of thumb.
Yeah, and I mean the coverage provided by either one is very similar in terms of it's going to cover nursing home, assisted living, most importantly, home health care. It's where most people use them. So your
Yeah,
your benefits are very similar. It really comes down to how do you want to fund it. Like, do you want to fund it with a single premium of 100 to 150K per person? For a couple, that might be 300 grand. Or do you want to spread it out over your lifetime? With a traditional plan.
yeah,
That kind of sums it
yeah,
up.
yeah. No, that's a good point. And I guess one of the main differences is I hear it all the time is the cash indemnity plans, that's just such a huge feature with the hybrid plans. Is the top three that are beginning most of the business these days are hybrid plans. And what that means is, as opposed to you paying the home healthcare agency, submitting a receipt to the insurance company, and then paying you back a few weeks later, the hybrid plans, once the claim is triggered, they just send you the cash and you could spend it however you want. You don't have to submit receipts. You could pay your neighbor, you could pay your friend, you could pay bills with it. It's a true cash plan, and just gives you a lot more flexibility, so you're not left scrambling to find receipts when you're 85 years old. Who wants to do that?
Yeah, I mean, I actually pay a premium every year on a reimbursement plan, which is the opposite of what you just described. And I wish it was indemnity, but we've had it in place, so it is what it is. But if I were shopping today and I had the option on an indemnity plan, it's a no-brainer.
Yeah, yeah, no, for sure. Yeah. So we just want to make a quick video today to kind of go, share that interesting news that long-term care insurance rates have actually gone down. And if you want to get quotes compared with all the companies, we work with every single one of them. We can send you a side-by-side comparison of the traditional plans, the hybrid long-term care insurance plans, even the hybrid long-term care annuities that are out there. We can send all three to you in an organized 3-ring binder side by side, and we'll FedEx it to you.
That's a pretty compelling play. Because we're independent agents, we don't care which company you purchase from. We work with all of them. We actually have contracts with each one of these individual companies to be able to run their quotes on our software, and it's a pretty turnkey process. And like you say, Derek, I mean, I would say probably 2/3 of my clients, when I say, "Do you want traditional or hybrid?" They'll say, "Well, let me go ahead and see both, but I think I like traditional, or I think I like hybrid." What about you?
Yeah.
Yeah,
Yeah, it's probably, I'd say maybe even 80% these days. And it's been an increasing number that want to see everything.
yeah, that's no problem.
And that's what we're happy to do. So if you'd like more information, you can call us like the gentleman in New Hampshire did today, or fill out the form that's on our site. Just click the request quote button, and you'll have quotes from 10 plus companies at your doorstep in a matter of days.
Yep, sounds good. All right, we'll wrap
All
this
right.
one up. And if you like what you're seeing on our channel and want to see more like backyard long-term care talk, subscribe to our channel, because we're making more of this.
All right. See you guys. Thanks.
Yep.